Okay, happy weekend, everybody. We're going to do something a little different this weekend, which is instead of showing you existing positions I've got, I'm going to show you ones that I'm considering getting into soon. In other words, these are short setups. I went through literally like 1,200 charts to dig up these 30 that I'm going to show you this weekend. I'm going to show you 15 today, 15 on Sunday. And I'm not in any of these, which is unlike most of my weekend video posts, but I find them very attractive setups. Before we dive into it, here's the Russell 2000, and in spite of an amazing week for the Bulls, Janet Yellen and Scotland being anchored to the United Kingdom, that going down to a no vote, and lifetime high on the Dow 30, and the huge BABA, largest IPO in human history. All those things happening. The cold fact of the matter is that the broad-based index, Russell 2000, is down for the year, and we are getting terribly close to what could be a very important trendline failure. That's the chart you're looking at right now. This is the entire rally from the March 2009 bottom to present. And as we zoom in, we fell over 1% on a Friday, and this is the trend line which has never been broken once since the bottom 5.5 painful years ago. And it could, and I underline could, happen this upcoming week. And I would also point out, as I had mentioned, that the moving average crossover, if we get quite close, it's like resting, like pixel to pixel, cheek to cheek right there on the simple moving average. And on the exponential moving average, check that a little more closely. Not quite as close, but it wouldn't take that much. We got tantalizingly close this time, but we're still positioned in a completely bullish format here. We haven't had a crossover on the exponentials since way, way, way back in over 3 years ago. All right, so on to these prospective new setups. I'm going to get rid of these studies here. All right, first one up is ACE Limited, symbol ACE, and we already had a violation of this trend line, and that damage I think is important, and so I'm pretty much ready to jump into this one. AGCO, AGCO. This one I covered on Friday. It's already a terrific topping pattern, and I could well regret getting out, but the prospect of a modest bounce back up to say 48 or so is there. So still a powerful pattern. Ultimately, I think it'll grind down to the upper 30s, but might get a little bit of strength in between. Applied Materials, AMAT. This one, I don't even know if I've ever traded this in my life. If I have, it's been a long time. But we've got a trend line here which has the potential to be broken, but that's not the reason I'm watching this. This range right here, if we can stay or get to the upper portion of this range, I think this is a very attractive risk-reward ratio. I'm going to be watching this anyway because it is possible, as tech weakens, to get a break of this trend line, which has been intact during this very strong rally since November of 2012. And I would also point out, let me go back to that one, I would also point out we may have a first failure of a series of higher highs here, because we've very consistently been making higher highs until this one. And this was, I think, an important tell in terms of the loss of trend. ATW. This is Atwood Oceanics. In this case, very nice topping pattern here. Could jump right into this one on Monday because we're right at the cusp of that neckline at 43.21 with really very little beneath to support it. BGC, General Cable, very similar circumstance here. I'm holding off on this one just in case we get a bit of a rally up to like 21 or so, but the much more important break here would be of this level, which, let's adjust this a bit. The value there is 19.43. BXP, Boston Properties, have a break of this long-term trend line. This real estate and home building in general, I think, are looking terribly vulnerable now. And this one I think I'll also leap right into on Monday with a stop probably at 119.02. Chesapeake Energy, any of these energy companies, this whole sector looks really, really prime for a fall. This is CHK, and here we've got a range play because we've had a very big range here from this level again, we have to adjust this for the dividend arithmetic errors here, 12.15 at the bottom, and at the top, 27.21 approximately. So we're at the top of that range, plus we've broken this intermediate term trend line. So I think those both add up to a nice combination. Dick's Sporting Goods, DKS, we broke this by way of this huge gap down a long time ago, back in May, and we've been trapped in this range since then. We're kind of on the high end of that range, plus we have a lower high here, so a number of very subtle things going on, which I think make it a pretty nice setup on a retail short. DO, this is Diamond Offshore. This is already starting to fall nicely. It cut beneath this horizontal, and it's fallen a little too far for me to be comfortable. It may just keep falling, and I may not get into this at all. But I like to watch this in case it does rally back to that support line. This one's probably the most speculative of all the 30. This is FireEye. I like this one only because it's been so terribly weak for most of its history as a public firm, actually. This peaked along with the Russell back in early March. It's been kind of a dog ever since. It's gone from nearly 100 to about a third of that price. But in spite of that already very substantial drop, it could be a nice speculative short on a small size with a stop just above this bar. Guess, GES. We've got here, broke this line a long time ago, also broke this horizontal more recently. And in this instance, we had a gap down, and that would be the basis of my stop loss. But on a long-term scale here, I think this is a very, very sick-looking chart. GameStop, GME. This one isn't as clean as a lot of the others, but here we've got a situation, let me just throw it on horizontal, make it more clear, in which I think we've really stalled out in the mid-40s here. I think it's very vulnerable to weakness, and here again I'd set a quite tight stop of 45.46. GPK, Graphic Packaging, got a big wedge here going on. This has been very, very strong. We're right near the top of that wedge, and so I think it represents a fairly safe place to sell it off, based on the prospect of at least a trip down to the bottom of the wedge, if not a failure of that pattern. ISIL, Intersil. This is another range play, plus we're butting up against a top that was really broke way back during the middle of the beginning of the financial crisis. So this pattern failed early in September of 2008, and it has fully recovered those losses since that failure, and I think it's backing away at this point. So I really like this setup. It really takes a 10-year perspective to see it, though. And the last of these, JCPenney, a little upset with myself because I actually was considering getting into this last week, but last week was so rough at times that I just didn't pull the trigger, and it fell about 5% on Friday. So not sure if I'll get a good price on this one, but we've got a nice gap down here. The gap's where this line is anchored, 11.88, and so I don't think JCPenney's future is a great one, so that one I'm going to watch and see if it manages to give me a decent price again. All right, that's it for this half. See you tomorrow.